There's no question at this point the housing market is crashing, and it is starting fast. Folks, I filmed this video to talk about luxury home buyer demand, but we just got even more data. So let me give you the more data. Let me talk then about luxury home buyer demand, which everybody said would hold up. And then we'll talk about implications and what this means for the market. So the new data that just came out within the last 30 minutes is that home prices have now declined 0.77% from June to July. If you go to the Redfin data center, we've already seen an over 5% decline in real estate prices from peak. But this is the first time that we have actually seen home prices decline according to Black Knight, a real estate and data analytics firm. And this company cites that not only is this the first decline since 2020, when we had a brief decline because of COVID, but it is the largest decline in a single month decline of home prices since January of 2011. And it is the second worst July or summer performance going back to 1991. That's terrible. It's obvious why this is happening. Rates going up, affordability in the toilet, and unfortunately, affordability is getting worse. Just this morning, Joe Biden suggested, hey, let's forgive student loan debt. So what did that do? That pushed the 10-year treasury right up to 3.11%, which is more pain for real estate. Anything above 2.75 for the 10-year treasury is painful. At 3.11, we're going to be seeing 6% mortgage rates back again very, very soon. On top of this, pending home sales fell 1% in July, and sales are down 19.9% for all resale properties from a year ago. Now, some realtors are saying the bottom is in, which is kind of similar to what you're seeing Toll Brothers say, which we'll talk about in just a moment. But folks, the fact that the 10-year treasury is now jumping even more today, especially after the Biden news, Now let's listen to the story on Toll Brothers. But folks, if you're not convinced yet that there's going to be an opportunity to buy real estate, I don't know what you're thinking, but there's going to be an opportunity to buy real estate, and it's going to weigh on jobs, and it's going to weigh on the economy. And if you want to master how to build wealth with real estate, links down below. There's a coupon code expiring August 26th that can get you in for the best possible price before we launch our Series A real estate company. Whoa, there's one thing everybody kept saying about real estate, and it's that, oh, don't worry, Kevin, don't worry. The luxury home buyers, they'll be just fine. Even though mortgage rates may go up, they'll just pay cash for properties, and they'll keep buying real estate. Real estate's gonna be fine, man. Don't worry. Demand won't soften. Okay, well, we got a little bit of an update today on that one, and it ain't good. Although there is some light at the end of the tunnel, and that is actually very interesting. Let's get right into it. Remember, August 26th is around the corner. That is when the prices on the courses on building your wealth through real estate skyrocket up as we get prepared to launch our Series A. We're gonna have the highest prices ever for the programs on building your wealth. So if you get in now, you will get the best pricing, and you'll get the chance to take advantage of the coupon and the bundle coupon available via the link down below. All right, folks, let's get into this. So Toll Brothers just reported earnings. They just reported their second quarter report or earnings, which is actually their fiscal third quarter, but calendar year, it's the second quarter. I hate it when they do this crap. But anyway, the big smoking gun disclosure that we got was the following. Take a look at this. Contracted homes were down 60%. So in other words, the number of homes that they were able to sell was down 60% compared to last year. Now, they have a funky calendar, but a decline of 60% means that in May, June, and July of this year, they signed 60% fewer homes, which means they actually had under contract 3,165 homes during 2021 during those 3 months, during the summer buying months, and that plummeted all the way to 1,266. That's a huge red flag. Now, what's actually really interesting about that, though, is that the stock market was basically at all-time lows during those months. In fact, what I think is really important to do is literally to pull up the stock market. Pull up the day chart on the NASDAQ, for example, and look at your absolute lowest points, because wealthier buyers tend to have more exposure to stocks. Their down payments could be coming from stocks. And take a look at this. May lows, June lows, July lows. And we only started getting a stock recovery towards the end of July. We also have a really interesting note here though, which I think is incredible because it shows us this connection. Watch this, okay? As our third quarter progressed, we saw a significant decline in demand as the combined interest of sharply rising mortgage rates, higher home prices, stock market volatility, and macro uncertainty caused many prospective buyers to step to the sidelines. It's going all the way up to about mid-July, which remember what happened here in mid-July. Mid-July, we hit the bottom, basically. Well, it was kind of at the end of June, but roughly around the same time, mid-July. And we started going a little bit more towards the moon again, right? And in recent weeks, we've gone a little bit more towards the moon. Now, we've retraced a little bit even from the recent runs, but take a listen to the next line here. However, in more recent weeks, we have seen signs of increased demand as sentiment is improving and buyers are returning to the market. Average weekly deposits in the first 3 weeks of August were up 25% compared to July. How interesting, because when we look at the first 3 weeks of August, which ends roughly the 21st, they're basically talking about this green bar section here. So from like right here, contracts collected on the weekend over here, which would be the 30th, the 31st of July, all then turned into green days in the stock market beginning of August. Green, 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 green. Only started having a little bit of a pullback here leading up to about the 19th, and that was nominal compared to the last couple days. So interesting how you can really correlate this pain over here with a pain in a luxury home builder with an average home price of like $925,000. In fact, they tell us average full year 2022 home price is expected to be $915 to $925, but fourth quarter home price is actually now expected to be higher than the full year's numbers, between $935,000 and $955,000. This is really interesting, and it shows us this tale of almost two cities because it's like, wait a minute. So the numbers are really bad. I mean, sales are down 60%, contract signings are down 60% at Toll Brothers, but they actually think there'll be margin improvement and higher prices towards the end of the year, and they're seeing more signings as we're seeing the stock market go back up. Interesting how you're seeing this correlation between wealthier home buyers. Now, in my opinion, the stock market, though, is not the only reason we're seeing this move. One of the reasons, in my opinion, we're seeing this move is a lot of folks in late July were able to lock in lower interest rates than what we actually have today. You have to keep in mind, a lot of the people, when they sign a contract for a home, they've already been walking in with their pre-approval letters, and they're getting large builder incentives to get rates that are lower than what they currently actually are. So this is kind of two pieces of the puzzle here to remember. But the first piece of the puzzle here is that in August, we've actually seen, starting at the beginning of the first week of August, going all the way through today, we've actually seen the 10-year Treasury yield skyrocket. Now, it really took off in the last 3 days. So I'd be curious to see if contracts are starting to fall again a little bit as these higher rates really start biting in. I believe that anytime rates are above about 2.75, which is that yellow line there, anytime we're above that, you're going to see pressure on sales. And if you look, the beginning of August actually had rates below that. People were able to lock those in, sign contracts. It's potentially true that more people signed contracts in the first weeks of August because they saw the stock market going up and interest rates actually trending down. Unfortunately, the opposite is happening today. We are seeing interest rates trend up, and we are seeing the stock market kind of start getting rejected on its bull run here, which many are just calling a bull trap. So, what does this mean for us, people who are not trying to buy like $1 million homes here, okay? I'm not in $1 million home. I don't plan to move to $1 million home. This is probably an $850,000 home, okay? Okay, I get it. That's kind of close, but still not there. But $1 million, okay? Anyway, point is, how does this affect us going forward? Well, here's my opinion on this. First, I really believe that what you're seeing here from Toll Brothers is a sign of volatility and uncertainty in the real estate market. When you zoom into any market you zoom into, you're always going to have a market that looks like this. It's going to look like this, really jagged. And it's going to look really intimidating on the day-to-day basis. Oh my gosh, it's up 10%, it's down 10%. Oh my gosh, the signings are this, da, 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 da. Like imagine if we could see Tesla order deliveries every day. It'd probably be like, oh, it's a red day in the stock market, no orders. Oh, it's a green day in the stock market and Tesla's up 5%. Oh my gosh, 10 times the orders that we usually get, right? Wouldn't surprise me at all if that's what happens, because you know what? That's just the reality of the way people operate. You know, they do say the stock market is a graph of human emotion. But what's the big deal for the real estate market? Well, the real estate market, even though we have these crazy fluctuations, there are large trends happening. And these large trends matter. And that's what we want to pay attention to. Because right now what we've had this incredible run-up of real estate prices that has almost been exponential, and it has started to slow. We've already seen home prices, as in the video that I described from this morning, decline about 5% from their peak. When we zoom into the noise, we can constantly see updates about what the heck is going on in the market. And let me tell you, just because Toll Brothers is telling us, oh, well, the first 3 weeks of August are looking good. Yeah, now rates are higher and we're starting to get rejected on stocks again. Don't hold your breath for the next quarter. Contracts are going to be, in my opinion, quite down compared to last year again. And all of this is going to contribute to the trend that real estate is no longer going straight up to the moon. Instead, it's actually on a slight downtrend. We're not expecting to see a crazy crash. It's not like we're going to wake up tomorrow and like Snapchat's down 40%. The real estate market is down 40%. It's not going to happen. It's going to move very, very slowly. The real estate market will continue to see buyers, but it will also continue to see companies like Toll Brothers or Lennar that are like, ah, crap, you know, we should probably start building less. That's why we're seeing building starts miss expectations and plummet. And not only are we seeing less building, but we're seeing builders who are more anxious than ever to get their existing inventory off the shelves by any means possible. And remember the trick that home builders use, and this is a red flag as well for even Toll Brothers. Even though their average home price might go up, you have to keep in mind they love to throw in incentives like crazy. I'm hearing some home builders are offering buyers 4 to 5% in credits, sometimes even more. On a $900,000 home, that could be as much as $45,000 to help you get a cheaper mortgage to help make it affordable. That doesn't last forever though. Eventually, the fear hits markets and we start seeing prices actually crest down, which we've already started seeing. All you have to do is go to the Redfin data center. It's really easy. You go to the Redfin data center and you type in median home price and you will see it. And you'll start seeing the decline. Once that becomes more popularly known and people believe that, 10-year treasury yield, which is closely linked to mortgage rates, isn't actually going down. If anything, it's going up. Then we'll continue to see fear build off of that black line at the top, which is 2022, rotating down already 5% from its previous highs, around 395, down now to about 374. The real estate fall has started. Now it's just a matter of how long will it last. And the longer rates are above 2.75, the longer the real estate market will have pain. The good news is it creates a buying opportunity for you. As long as you are educated in going from zero to millionaire as a real estate investor, learning from a professional property manager, that's myself and my family. We've done professional property management as a family for over 40 years, myself about 10 to 11 of that. Real estate broker, I've been a mortgage lender, I've been a licensed contractor. We know how to work with tenants. We know how to make tenants and toilets fun and low work so that way you don't have to have the stress of evictions or headaches. That's what you want to avoid with real estate. And you want to buy real estate below market value. So check out the program's link down below on building your wealth. Take advantage of that coupon code before the 26th.